Good evening from Beijing. I'm Kate Kui. Today we continue our 2022 Economic Prospects series, and we are very honored to have Professor Fan Gang, a world-renowned economist, joining us. Professor Fan was a former member of PBOC Monetary Committee and one of China's most active advocates for reforms. Today we will seek his insights on China's monetary policy going forward, currency issues, and his outlook for the global economy. So Professor Fan, very good to have you.
Thank you for having me.
Right. If you look at the signals that PBOC sending to the market within this week, on 17th, it dropped its interest rate, and today it also lowered its LPR rate by 10 bips 1 year. What kind of messages they're trying to send out to the market, and how should we understand it?
Well, basically, this is a signal that they will be more proactive to utilize the full rooms for the monetary policy to support the economic growth. And this also showing that people are thinking how to maintain the growth momentum and how to turn the current slowdown trend around. Because it's truly, in the last 2 quarters, Chinese economy is slowing down. Although the whole year looks back, we are still okay. We grow more than 8% annually, and more than 5% in at the 2-year average. We still one of the major economies grow faster than most of others in the world during this pandemic.
Right.
But the data in the 2 quarters of last year really show we now have the trend of slowdown. The investment also in 2 years terms grow only by 4% or something. In the consumption even lower. If we to deduct the inflation factor, is only grow by 3% at the 2-year average. So that's really something quite low, historically, comparatively speaking. So that's, I think, worried the policy makers, worried the central bank, monetary policy makers, and they now really speed up the policy maneuver, try to turn this kind of the trend around.
Right. We had a very aggressive pickup in the first half of this year, last year, 2021, and the GDP growth rate is very high. And as you said, in the second half, the GDP growth actually slowed down. What caused such slowdown? Before we want to cure it, we need to find out where the problem is.
Yeah. Well, one of the reasons I say last year is still, for China is still not too bad. That means even we have a lower growth rate, but compared to the other countries, we are in pandemic still. Right. And look at the, last 2 quarters of last year, you can see one of the major factors behind this slowdown is still the pandemic. Particularly since the 3rd quarter, compared to the previous year, 3rd quarter, 4th quarter is quite a, whole economy quite revived. The service sector even, get very active.
Right.
But not this year, last year in 2021, in the 3rd quarter, we already see some cases here, some cases there. With this zero COVID strategy, that's stopped quite a lot of the service activities, stopped quite a lot of economic activities. Consumption, for example.
Right.
When China reached this level of income, say $10,000 level, basically at this stage, it's consumption growth will very much depend on the service growth.
Right.
However, we have this pandemic, the service sector, market is heavily, mostly heated.
Right.
And that stopped quite a lot of the activities, the travel, the tourism, the entertainment, all the kind of service sectors, particularly person-to-person service sector, including our meetings, all those kind of things have been really hurt. So that's remind us we are in the world. We are part of the world. When the world suffered with this pandemic, we are not excluded. We are, have the same problem.
Right.
Plus, of course, there's other factors, such as property market, real estate market, something other like, the energy shortage during in the third quarters. All those factors play out, contribute to this slowdown in the second half of the year.
Right. So what happened is what happened. Going forward, how should we actually react to this kind of slowdown trend? How should we buck the trend and then get back to the growth trajectory? We are apparently, easing our monetary policy right now, as we just discussed. So first of all, are we too late? And secondly, how should we further, put more vibrancy into the system and try to rescue the trend?
Nothing is too late. But, we can discuss if we can adopt more proactive policies earlier, maybe situation will be better. But as you just said, it's already past the past. So we're looking forward, think about how we can do. Well, basically, I think here government policy really can play the role. Monetary policy and fiscal policy.
Right.
Here, I have to say, monetary policies can still play a big role because, people are, still in some sectors, people still want to make investment, want to expand their business. So they need money, so they need liquidity. Of course, lower down the interest rate, lower down the reserve requirement ratio, all those things provide more liquidities, and then make the business liquid. Right. However, recently in the central government economic conference, there is a word saying demand is contracted, supply is heated, and expectation is weak. Right. What is expectations? Expectation what? Future returns on the investment. Right. If people, pessimistic about the future, their expected return on the investment is weak and low, people would not like to make investment. And so when people do not want to make an investment, people do not want to have more loans, don't like to borrow more money because they are thinking about the returns. And at the same time, banks, when they got the project, they need to check if this project have the future, have the return expected. And if they also pessimistic, this kind of the demand for liquidity would be weak, and would be low. That's in the economics, we call this liquidity trap. Right. Meaning that even you have liquidity, the banks have a lot of liquidity, but demand for the liquidity would be low. Right. Because people do not have the expectation for the future return. That's I would say, somehow can describe the current situation. Right. If this and is that's why. Yeah. 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 If this is a dilemma that we are facing, what should we do, and how to get out of this trap? That's right. So that's why fiscal policy is important
Right.
in this situation, because when investors do not like to spend money, you need somebody to spend money. That's the government, and spend money to buy things,
Right.
to buy from the producers, and then the producers can buy from other producers, and then you speed up the economic growth, and the people start, money, the liquidity start to circulate, and the demand start to show up in the market. So that's why I would like to give very much weight, importance on the fiscal policy at the current situation and for the short run in the year of 2022.
When you talk about the
and
fiscal policy, can you elaborate a little bit?
The central government not only talking about the monetary policy, but they also talking about the fiscal policy.
Right. When you're talking about the fiscal policy, can you elaborate a little bit more? Are you talking about the tax policy, or what are the other possible measures that you think they should take?
Yeah. Well, we may, first of all, to look at the other countries. What is the stimulus policy? Proactive stimulus policy. Right. That's basically is about the government deficit. Government deficit, which created the demand for the market, right? So that's why when the pandemic happened, all the country rushed into, all this kind of the stimulus policies.
Right.
Even though the second year, 2021, U.S. run a fiscal deficit at 15% of the GDP, equivalent to 15% of the GDP.
Right.
That's a lot of money, but we don't compare to the U.S. U.S. is not comparable because the U.S. is a country to print the international money. So they create the debt problem, they create the inflation, but the global, all other countries share the risk of those. So they don't care too much about, debt problem, they don't care too much about inflation, but we have to care. Right. So we don't compare to the US, we compare to the other country, Japan. Japan in 2021 still run a fiscal deficit at more than 9% of GDP. Right. And all the other European countries run basically 7% of GDP. And how much China run? 3.2% as a budgeted fiscal deficit. At the end, when to calculate it later, we may find that it's even lower than that 3.2%. And then we can see actually we didn't use very much of the fiscal policy in the 2021. Right. So that means we still have the room to using this fiscal policy to stimulate the demand, to increase the demand and to stimulate the economy in more proactive way. And then the people, of course, worried about debt issue, government debt over GDP ratio, right? Japan now run government debt over GDP ratio 267%. US 130, Europe, UK 120, even Germany run a government debt over GDP ratio 73%. And we, China, it's only 46%. Right. Of course, we have some so-called hidden local debt, but generally speaking, our economy is very balanced, quite healthy in terms of the debt burden. So from that point of view, we have a big room to using this fiscal policy to support the growth. Right. And of course, this is public money. How we can do it? Infrastructures, maybe the public rental housing in the big cities for the young people, for the newcomers to the cities, and then the new infrastructures for the digital economy, the 5G and others, and the public health system also need a public investment. Those are all the government can do. Right. Those all we can use in this public money to invest in the economy now to stimulate the demand, right, and lay down the foundation for the future growth and the future society and the future economic and social development. Right. So that's, I think, the good chance.
Right. So basically, to summarize what you just said, you were saying that China still have a lot of rooms in terms of fiscal measures try to boost the economy, and during which government will and have to play a critical role to boost the economy by spending more money, so to speak, both the central government level and also the local government level. I think that is fair enough if we look at international experience and the current numbers that you just laid out. Apparently, we do have enough safe buffer. However, is government spending enough? How should we better protect private sectors, entrepreneurship, or their vigor to better put their energy into the system and make it a virtuous cycle?
The government role in this regard, in the microeconomic policy issues, is only short-term, right, role. It's only kind of the emergency role. You know, you have the emergency, you have to have support of the demand, and then the government has spending. But this is nothing to do with the structural change, nothing to do with the long-term strategy, long-term energy of the economy. Right. You want to have a long-term energy, you need a lot of other things. You need to develop the companies, particularly the non-state private sectors. You need to have more innovation in technology and scientific theories, and you need to have better urbanization policies. Right. You need a better structural changes. A lot of things, including the capital market, the bond market, and the financial system. A lot of things. Those things are not relevant to the short-term issue. Right. It's relevant to the long-term issue. You have to do it every day. Even you have the government, policies, you still need to do the reforms. Right. On the structural reforms in the supply side, the demand side. You need to promote the development of the market. You need to promote the development of the companies. So that's something. It's a long-term, more fundamental. We have to think about, and not stop thinking this kind of issue every minute. You have to think about this kind of issue all the time.
Right. I think that's a very fair comment. However, just as what you just mentioned, I have been hearing this word for many, many years that we need to do the structural change so economic growth will be healthier. But nowadays is whenever there's a problem, government is still playing the most critical role, and what stage are we in terms of the structural change of our economy?
Well, it's already quite different. I mean, we always try to find out problems, and then we blame the government. Right. And try to government to play the more roles. But actually think about the economic structure. Think about the technology development. I think we have a lot of changes. 70% of innovation now come from the non-state sectors. Right. Private sectors. Right. So you cannot imagine, say, 20 years ago, 30 years ago. So that's the long-term result of reforms and the structural changes. So that's, you have to keep trying, keep all the effort to do this all the time. And then you have the result. However, what we are talking here is macroeconomic issues,
Right.
which is not the long term. If somebody tell you, we need to develop the private sector to turn this market trend around, that take time.
Sure.
That take time. You cannot really to see that in 1 year's time. You need 10 years, 20 years, 30 years effort.
Right.
But for the short run, you need some kind of the monetary policy, fiscal policy, and some other emergency policies to support the reform and to support the growth at the same time, to support the reform.
Right.
And give the reform more time.
Right. So under this kind of context, post-COVID and with all those structural problems still lingering there, and as the three terms you just mentioned, supply shock, weakening expectations, and shrinking demand, how would you expect our 2022 monetary policy will be?
Well, you already mentioned the central bank already moving,
Right.
already geared up with the policy initiatives.
Right.
We cut the rate. I believe they will cut again, and they may cut the reserve ratio again, and they may have more so-called macro economic policy. Macro monetary policy, which is targeting on the small, medium-sized enterprises, which have been there for past 2 years.
Right.
And also, I would like to expect that I hope they will have some monetary policy for the consumer loans.
Consumer loans.
Actually, there is quite a number of monetary policies for the small, medium-sized enterprises, for the supply side institutions. But so far, I haven't seen some special, specific targeted policies for the consumer credit.
Right.
Well, consumer credit includes several parts. 20% of the total consumer loans actually is the small companies business loans, 20%.
Right.
And then more than 50% of consumer loans is the mortgage.
Right.
Is for the housing. So only very small part, maybe only count for 15% of the GDP is the so-called consumer credit, like credit card spending, like the down payment, like the payments system, that kind of the consumer, the so-called daily consumer loans, which have been count a very small part of it.
Right.
And the interest rate is very high. So if we want to speed up, we want to expand the demand on the consumer goods, we need some policies for the consumer loan as well.
Right. So basically try to
of course,
stimulate all those consumers and then try to stimulate.
That's right.
Right, to spend.
That's right. That's right. And now we have internet.
Right.
We have internet financing, so it's easier to do so. So we need some policies for that as well as those policies for the demand for the supply side, small medium enterprises. We need to support our consumers.
Right.
So that's a basically that's what I expected. The monetary policy in 2022.
Right. Thank you for sharing these insights. So on one hand, we are still printing money because we need to stimulate our economy by providing more liquidity to the system. Well, on the other hand, apparently U.S. side is tapering off. So how would the currency exchange rate play its dynamic during this process?
Yeah. Now you come to a very critical issue for the 2022. Credit issue is how the U.S. market would play out.
Right.
How the U.S. policy would do. They have been very aggressive in monetary policy and the debt policy in the past 2 years. Very aggressive. But now they try to get it out. Try to tapering this away. So that's we can expect it. The Fed said they will they will increase the interest rate for 3 times,
Right.
and they will tapering. All you can expect it. But one thing is hard to predict. That is the how this will have the impact on the global economy, how this will have the impact on the U.S. market, and then how this have the impact on the global economy, particularly the capital market in the developing country,
Right.
in emerging markets. So that's really something. It's hard, really uncertain, very hard to predict. So that's the risk, the major risk for every country.
So what is your take on that?
I would say if things going well, that means no major crisis take place. Then the renminbi may appreciate more.
Right.
Because China's export very strong. We have a quite large of surplus, and our foreign reserves increase. So all the factors may make Chinese yuan appreciate in 2022. However, if we have the turmoil in the global capital market, then more investors will turn to U.S. dollar again,
Right.
U.S. dollar assets again, because it's a kind of a safe haven.
Yeah.
Because it's an international money. Then the U.S. dollar index may increase, and then renminbi may not depreciate, but less appreciated. And maybe other currencies, including the developing country currencies, will suffer more depreciation.
Right.
So that's also quite uncertain in the sense that we cannot make sure, we cannot be very certain about what happened in the US market and then the impact on the global market.
Right. So it seems it's a little bit different comparing to what happened in 2014 to 2018 period, because during that period, actually when US tapering off, RMB, if I remember correctly, will actually depreciate a little bit. But in this round, you were expecting that we're definitely going to appreciate. It's just a matter of how much that RMB is going to get appreciated. Why is that? Is that because China yuan is now having much more dominance or a bigger position in the global economy, and then it's being pegged by more countries or exports and trade related stuff?
Well, more trade related to renminbi actually played a stability role,
right,
for the value of renminbi, but the problem here I was talking is the financial instability, which may caused by the U.S. monetary policy,
right,
and tapering activities. If they yesterday, I think President Xi mentioned this. If the developed country slam the brake,
right,
then too hard and too quickly, and then the impact will be very big, very negative,
right,
for the developing country. That it is very uncertain. That will make renminbi maybe more fluctuated,
right,
rather than appreciate.
right. Is there any way that we can avoid this kind of situation to not let it happen? Because certainly it will damage the global economic stability.
Well, we don't have ability to.
So U.S. has to play responsible. Otherwise, if they are not responsible, then the situation will be damaged.
But some policymakers in other countries may not care of the global economy, may not care what happened in China, what happened in the emerging market. They don't care. They only care their inflation, for example.
Right.
7% of inflation is something
Right.
really high historically,
Right.
and they may only care of that kind of the things, and they don't care. They never cared. In the past, they never cared of others, and I don't believe they will care others this time.
Right.
So it's difficult to predict. That's why I say it's difficult to predict.
Right. Well,
Hopefully they will be more responsible.
Right.
They will be more responsible and more careful.
Yeah, hopefully they will be more responsible and play multilateralism. That's the word I think they should honor.
That's right.
Well, let's talk about one very critical issue, which is the green energy transition, because that is something that the whole globe is experiencing, and also relates to the economic performance of every one of us on Earth. So how do you see the economic structure change during this green energy transition, notably commodity price and asset price, and also global power gaming among each other?
It's a big change, and it's really difficult, particularly difficult for emerging market, particularly difficult for the developing country like China.
Right.
And the problem is that we do not have much other alternatives at the moment, and the coal and oil is our major source of energy,
Right.
and we need energy to fuel our development. So we still need that, and we need development anyway. So that's really the challenge. How can we change the structure of energy?
Right.
Then we can change the structure of the economy. The good news is actually due to the good policies and good effort of companies in the past 10 to 20 years, actually, China have now in a very positive position in terms of energy structure.
Right.
We have the highest renewable energy ratio in the world, actually. Among the major economies, we cannot compare it to the small economy like Norwegian and other, small countries.
Sure.
But for the major countries, our renewable energy really developed very fast, and the solar, the wind increase very fast, and we still keep nuclear.
Yes.
And the hydrogen is developing very, very fast as well. But although it already reached the limit, so that's actually the good start
Right.
for this kind of the energy transition. However, a lot of things need to be done, and a lot of new technologies need to be created, particularly the carbon neutral technology. So this is still far away from maturity, and it's really needed.
Right.
We will reach the peak in 2030.
Right.
But problem is how high the peak is. If the peak is too high, then the neutrality issue will become more difficult. So that's really the big challenge, and for the government and for the company. And also created a lot of the new opportunities for the company.
Right.
Investment in the new, not only the new energy, but new materials, for example, how to replace the old materials with the biomaterials.
Right.
Those kind of the, technology and the industry development will be very crucial and will be heavily profitable in a sense.
Right. So, as what you just mentioned, even though we have a lot of challenges because we're still dependent on coal and fossil fuels, we still made our commitment for the common goal and just to fulfill the commitment that we made in front of the developing countries.
With the Paris Agreement,
right.
Now our country, the leadership, the country make the commitment to the world, and we have to go with it. So that's why now we have a political value for that, and also the market value also moving in that direction.
Right.
People will judge your product, judge your investment, judge your credit,
Right.
by the low carbon standard.
That's
a
called
different
green
from-
premium in Bill Gates' way.
That's right.
Right. Okay.
Yeah.
So I noticed actually on your background, there's a very interesting logo. Can you just tell us what that is? That's the institute that you just newly founded.
Yeah. No. It's not I founded. It's not my founded.
Right.
I just invited to be chair that institute. It's already more than 30 years.
Okay.
From the founding,
So
from the establishment.
Right.
It's
So
called the China Development Institute.
Oh, China Development
in
Institute.
English.
Okay, I couldn't see it very clearly. Right.
Yeah. You see that two logos?
Yeah.
Two circle?
Yes, I see these two circles.
The second round circle is the logo of the institute.
Okay.
And the first one is the logo of the so-called Statetop think tank logo.
Okay.
This institute now is first group of top think tank, which included in the central government experimental program.
Right.
So we are now supported by the central government, and to making the policy research for the central government.
Right.
So this is a think tank, and we are doing a lot of policy research, including the microeconomic policy, development policy, and local policy development policies as well.
Right.
So it's an interesting think tank located in Shenzhen. So it's not in Beijing. It's located in Shenzhen.
Right.
And established in the early days when Shenzhen started to have the special economic zone. Then we have this kind of experiment, also a very experimental way to establish the think tank.
Right.
I was invited to be the president in later 206.
2006.
I was invited.
Okay.
So now it's already quite many years.
Right. My last question to you, last but not the least, how would you project the GDP growth in 2022 for China?
Last but most tricky one. I would say 5% is the minimum.
Number. Right. 5%.
Yeah.
Okay.
It could be higher than 5%.
Right. Okay. We'll wait and see.
First quarter still the slowdown maybe continue.
Right. Okay.
But I hope there's a turning point in second quarter. Turning point doesn't mean it's a turn to grow very high, but it just stop sledding.
Right.
It's just stop, slow down, and start to turn up.
Right.
Hopefully that will be the case.
Okay, great. Thank you very much. So that is Professor Fan Gang, a former member of PBOC Monetary Policy Committee, who shared with us during past 1 hour on his view of global economy, currency policy onward, and also monetary policy in China, as well as the dynamics between China and the United States. So that is all for today's 2022 Economic Prospects Dialogue Series, and see you next week. Next week, we're going to have two guests joining us to continue this dialogue, Professor Zhu Ning from Shanghai Jiao Tong University and Professor Wang Qing from Chongyang Investments. Stay tuned.